More Americans filed for jobless claims last week. While the labor market remains broadly healthy, there are signs that it may be finally cooling. The problem is that people don't feel this. The economists, the wealthy, like to look at the numbers and they're like, wow, numbers are great. Everybody's doing great. But the problem is the money everybody's making doesn't mean anything. Yes. More applications for unemployment benefits rose by 13,000 to 231,000 for the week ending in November 11th, the Labor Department reported Thursday. That's the most in 3 months. Jobless claim applications are seen as a representative of the number of layoffs in a given week. The Federal Reserve has been tapping the brakes on the economy and the labor market for nearly 2 years, trying to stem what has been the highest inflation in 4 decades. The central bank raised its benchmark rate 11 times since March of 2022 as a part of that effort. Yet, for months, it seemed as though aggressive actions from the Fed had little impact and companies have been forced to pay more to land employees. Oh no, they gotta pay people more. That's crazy. Cracks, however, are starting to show. Overall, 1.87 million people were collecting unemployment benefits that week. That ended November 4th, about 32,000 more than the previous week, and most in almost 2 years. That was the 6th straight week that continuing claims rose. Job growth remains strong, says businesses have yet to start reducing their workforce in a significant way, says Rublia Fourcroy, chief U.S. economist for high-frequency economics. The continued claims data are pointing to some softening in labor demands, in line with what the Feds want to see. Economists suggest that continuing claims are steadily rising because many of those who are already unemployed may now be having a harder time finding work, an indication that the labor market is looser than it's been in the post-pandemic era. U.S. employers slowed their hiring in October, adding a modest but decent 150,000 jobs. It's only the 3rd time in almost 3 years that monthly job gains have come in under 200,000, yet all 3 of those instances have come in the past 5 months. The claims data are consistent with a job market that is cooling enough to keep rate hikes off the table. The claims data are consistent with a job market that's cooling enough to keep rate hikes off the table, but too strong to make rate cuts a consideration anytime soon, said economist Nancy Vanden Houghton of Oxford Economics. The Fed is surely encouraged by recent inflation data, but need to see a further slowdown in the labor market and wage growth to be persuaded that inflation is on a sustainable path back to 2%. Fed officials opted to leave the benchmark rate alone at their most recent policy meeting. Another increase before the end of the year has not been ruled out. Yet recent data shows inflation is continuing to ebb, a priority for Fed Chair Jerome Powell. Overall inflation didn't rise from September to October, the first time that consumer prices have collectively haven't budged from one month to another in more than a year. Compared with year earlier, prices rose 3.2% in October, the smallest such rise since June, though still above the Fed's 2% inflation target. 4-week moving average of jobless claim applications, which flattened out some of the weekly volatility, rose by 7,750 to 220,250. Whoa, that whole thing was a big mouthful.